GE Aerospace beating second quarter estimates on the top and bottom lines. And Phil LeBeau joins us now with the guy we were just talking about, CEO Larry Culp. Hey, Phil.
Hey, Joe, Larry, thank you for joining us on a big day, not only for reporting Q2 results, beating on the top and the bottom line, but also Investor Day starting in about a half an hour. I want to talk about Q2. Much better than last year, much better than Q1. What's driving that?
Well, Phil, thanks for coming to Evendale, Ohio. We're thrilled to have you here. I think anytime you've got orders, revenue, and operating profit up 20% plus, earnings up nearly 40%, and free cash flow doubling, there's a lot that's going right in the business. And I think it's fundamentally a function of having $175 billion of backlog to serve, both in commercial services, which was up 29%, but also a new make for our commercial and our defense customers. And that being put to better use with Flight Deck, our lean operating model, which is allowing us to improve safety and quality while at the same time quickening deliveries. And that's really what our customers want to see from us. I think they saw that in the second quarter.
I want to talk about Flight Deck with relationship to quality control, because the Air India crash, the GE engines were not implicated in any way, with at least initially in this investigation, in terms of the crash. Yet at the same time, this has been an opportunity for you and your team to say, okay, how do we ensure quality control clearly is front and center in terms of we've got more engines in service, we're delivering more engines, and how do we do that and keep margins over 20%?
Well, Phil, first and foremost, I think what happened with Air India 171 was a true tragedy. Obviously, our sympathies are with all of the survivors and the loved ones who lost family members. For me, being still relatively new to the industry, it was a moment to once again see how the industry comes together in these situations. The industry does not compete on safety. And for us, you mentioned Flight Deck, that's really our operating model that reminds all of us that our priorities start with safety, then quality, and only then do we talk about delivery and cost. SQDC always in that order, whether it be with respect to product safety and employee safety. So this is something that we do every day. These unfortunate situations are a reminder for us to double down, to look, to learn, but the GE Aerospace team is focused on safety as job one every day.
When we talked last quarter after your results after Q1, you talked about the uncertainty that potential trade wars might be developing. For you guys, for the rest of this year, do you feel a little less uncertain? I know that's a strange way of phrasing that, but do you feel more certain in terms of what the implications may be of tariffs and trade wars?
Well, Phil, when we spoke in April, a lot of this was fresh, right? But here we are in mid-July, coming off a quarter where orders were up 27%, both in services and in new make engines, so demand continues to be robust. I think we've got better clarity as to where we're going, at least with respect to aerospace. We've been advocating, as you know, for a return to the tariff-free construct in aerospace that dates back to 1979. We saw that captured in the U.S.-UK agreement. We're hopeful that that will be replicated in the other trade deals that are on the table in the days and weeks to come.
Well, you were with the president in Qatar when he announced a massive order, not just for Boeing wide bodies, but obviously, more than 400 GE engines that will power those aircraft, including the 777X, which has yet to be certified. But are you confident that goes into service next year as Boeing is planned?
Well, that was a big day for us in Doha to have the president there, Kelly to his right, I was to his left, announcing the largest wide-body order in the history of the industry, thus both our companies. We're thrilled to be under wing. We know customers love that product. The win rate against competition, I think, is in the 60% range. So we're working. It'll be the most tested engine and aircraft in recent memory. And we'll leave it to Kelly and the Boeing team to talk about the introduction schedule, but we're working hard toward that 26 date.
But when you talk with the president and you say, look, the tariff, the agreement that we worked with the UK, we should have that worldwide, are you confident that sticks?
Phil, I'm optimistic. I really am. When we're talking with the president and others in the administration, I think there's a real recognition that the U.S. enjoys that $75 billion annual trade surplus for a host of reasons, not the least of which has been this tariff-free regime. The president himself understands the industry very well, right? He had his own airline. He flies his own 757. He understands this industry, I think, in great depth. And we're, again, optimistic that as the other trade deals are reached, that what we saw in the UK agreement will be in place.
You have your investor day starting in about a half an hour, and you've put out guidance for 28, I think free cash flow in 28, target of $8.5 billion. But you hear the skeptics, I'm sure, who sit there and say, you look at this stock performance over the last 2 years, it is overvalued. The valuation is stretched. They can't grow into this within the next couple of years. What do you say to the skeptics?
Well, we're focused on the customer first and foremost, and those things that we can control. But we're delighted to have the opportunity today, albeit in a short form. We were hopeful to do the long form outlook back in Paris to not only raise the 2025 guide, but as you say, talk about 28. And with respect to 28, we think we're going to be able to grow at a double-digit rate now. We're targeting $11.5 billion of operating profit. That should allow us to drive earnings at a mid-teens level, and that should drive $8.5 billion of free cash flow. So we're also taking up our return of capital to shareholders, Phil, by 20% to $24 billion today. Again, with a $175 billion backlog, with demand being strong in the aftermarket, let alone with respect to fleet modernization and expansion, coupled with everything that we can control within our four walls with Flight Deck, we're optimistic about the path that we're laying out today.